Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 23rd of July, 2022, and this is the weekly technical analysis for the euro, the cable, and the Aussie dollar for the fourth week of July. And as you can see across all these three major pairs, they've managed to find support and recover somewhat from their recent lows. That's for the euro, and that's the cable, and also for the Aussie dollar. So they did manage to find support the previous week from these key support levels, key round figure levels especially, and managed to recover. And we'll see whether there's going to be a further continuation of the recovery or whether it has already hit a retracement level. So let's begin with the euro dollar. And after finding support from the parity level at 1.00, that was from the previous week, it has managed to recover and climb all the way back above the 102 level, just short of the 103. So for last week, it topped out at a high of 102.78 before pulling back down and close near the 102 level. So it's at 102.14. So it did manage to climb higher right from the start of the week for the first couple of days, and then consolidated for the rest of the week here. So this is now a support zone at the 101. Of course, the parity is a major support zone. And this 102 level is a very key support now, just sitting above that. And with the swing low here at the 103.50 area, it's a key resistance zone. And this is from way back, all the way back from the beginning of 2017. That was where it was, where it fell through. That was the key low that it broke through, and now it's attempting to climb back up to retest that level. But that's going to be a critical zone that it may or may not reach. Let's take a look. This is the weekly time frame, and that was last week's candle, which showed a strong bullish recovery and a small pullback. So there could be some continuation move back up to the 103, and we'll see if it's able to reach and retest that swing low level where it broke down from. All right. So we'll see if it's able to test this level, and if it does, then after that it could likely consolidate between the 101 and the 103. So 101 will now be a critical support. So unless it's not able to break 103, then it could break down and retest parity again. That will be a critical time for it to do so. And with exposure this week to the Federal Reserve's turn, where it is expected to increase rate by another 75 basis points. So from 1.75 to 2.5%. The ECB last week on Thursday managed to increase rate for the first time in 11 years, and it surprised expectation by increasing by 0.5% instead of 0.25%. So that was on the Thursday, and after that, that was where it topped out, and it has pulled back since then. So this will be a critical zone to break through the 103 and test this swing low. Now, if we can also move this to the recent swing move down, move the Fibonacci here, and you'll see that it did almost hit the 50% retracement level before pulling back lower. And the swing low area is around the 62 Fib retracement with this previous swing low level. So we could have this Fib move down to this area. Okay. Yeah, let's move this to its area now. And so the round figures do align with the 21 Fib retracement and then the 38 Fib retracement at the 101 and the 102. And we'll see if it breaks down from parity, then that's going to be a potential extension lower down to the 97 round figure. But for now, let's see whether this coming week, how the US dollar is going to react to the FOMC rate decisions and how that's going to impact the euro dollar. So let's take a look at the US dollar index and the DXY. So here's the US dollar index, and from the start of the week, it did gap down lower and then continued lower throughout the week for the next first 2 days of the week, and then before consolidating between the 106 and the 107 round figures. So since hitting the high the previous week of 109, it has retraced lower, and that's inverse correlation with the euro dollar, where it hit parity at 1 and then bounced back up, and the DXY did the opposite. Okay, and it closed on the Friday with a doji. So it's indecision for that day, and we'll see if it's just going to continue to consolidate between these two levels at this Fib levels above the 107 and between the 106. And if we take a look at the weekly time frame, that's the bearish move down after the previous week's spike to hit the 109. Let's pull back down into the 106. So there could be a bit more bearish momentum coming back down to test this swing high. It broke up from. That's the 100% fib there at the 105.54. So similar to the euro, where it has broken down and attempting to retest that swing low. So could be a dip down to test this level. So this is going to be a key support level, and let's include. So let's change this to resistance. And 109 is now clearly a strong resistance level. 106. Let's move this swing high area here to be a significant support. And of course, around figure 105 is going to be a critical support zone as well. But for now, let's leave it here. Okay. So let's see how the US dollar is going to react with the increase rate for this Wednesday with the FOMC. And whether it's going to attempt to break out and test the higher levels, or it's going to be stuck and contained within a restricted zone. And it needs to break above this fib area at the 138 fib extension, and break out higher, perhaps to test the 162 fib again. All right. So let's move back to review the other major pairs. Let's move on to the cable. And also from the start of the week, it did climb up higher right from Monday, but then it was restricted and constrained from the previous week's high as well. And basically was restricted here. So after a strong move on the Monday, it basically just paused for a week and consolidated and ended up back up close to the 120 round figure. Could not break out much higher, but then settle back to the 120. And this coming week as well is also exposed to the Federal Reserve rate decision. And following that, next week, the week after, will be the Bank of England's turn, where they will need to decide on their next rate hike. So for now, it's restricted and looks like below a previous swing low here as well. So, but at least it did bounce off from support at the 118. And back above the 138 fib extension here. We'll see if there's enough momentum to drive it further to retest this swing low at the 100 fib. So this area now at the 120 is going to be a key. Well, it's in between now. It's still holding as an interim resistance, and since it's not able to break out above the 120 yet, this area now at the 118 along with the fib is a strong support zone. Okay, if take a look at the weekly time frame, and that's the swing low that it fell through previously. And on this weekly time frame, it did manage to recover, but didn't make a significant recovery past the 120. So this is the critical stage now, where it needs to continue and resume its recovery to test the swing low at the 100 fib at the 121. So we'll see if it's able to do that this week, or whether it's just going to be constrained and consolidate. So 121.55 at this swing low, that's going to be the key resistance. All right, let's move on to the Aussie dollar. And let's see the recovery for the Aussie dollar has made more significant strides. And from the 68 level, it has managed to climb all the way back up to this 138 fib extension area and hit the daily 55 EMA, blocked by that, and was restricted from hitting the 70 round figure. So started strong from the start of the week, and then faltered a bit towards the end, and closed also as a doji. But it did manage to climb back up above this trend line where it fell from before, and it is sitting above the resistance of the 69. So this is now support. This area is also support now. 70 zone is definitely resistance. And below that, at the 67, that's the significant support. Okay, let's take a look on the weekly time frame. And after the previous week's bounce, like a hammer, it was a longer low wick, and it did manage a strong push up back into the 138 fib. And we'll see if there's any further bullish momentum. There's Australian CPI this week, and also exposed to the Federal Reserve rate decision. But it is good that it has climbed back up above this trend line. And I think we can move this fib now lower as well. Move this down here now to this latest swing. And yes, it did climb back up to test the 50 fib area, just like the euro. Okay, so it's at a critical area. Whether it's able to continue to break out higher and perhaps maybe get to a 62 fib retracement, then we'll see after that whether it's going to falter and lose momentum after that. So, but for now, this is critical support at the 69, along with this trend line. Okay. All right, so do check out my other videos on spot gold and dollar yen. Have a good week and a safe week as well, and cheers for now.